How's it going, everyone? It is December. Not December. It is December. It's Tuesday, December 10th, 2024. We are going to quickly get into the picks from yesterday and our current picks. And on those, we are not going to have a maybe usual video today. I think because I'm not going to give any pick in this video, I am just going to kind of review what I do for my market analysis. And, when I decide to take the gains or do nothing or do something, or kind of what am I expecting here. So pick from yesterday was Amazon. I liked it as a potential little day trade long over here. I like this bottom that was forming over here. So I like this entry at 145. And you can see here's the market at 145. So it's breaking through VWAP. So wouldn't mind taking a small starter position over here. You can see that this was a failed breakout. We got the follow through over here. We got the breakout and then no follow through, bearish engulf, quick smack down at the beginning of the range. And then this little push higher prompted us for this next leg lower. So that was a fake out. And then you had a chance to get out at the break of VWAP over here. And then just live to fight another day on Amazon. So a small loss in Amazon, nothing to be overly concerned about if you had the right size and if you had sort of the right expectation with the market. We need to see some follow through, which is why we kept that position fairly short. I like this double bottom higher low, and it looks like institutions like that too, but they like that so they could sell through it. This move on VWAP would have attracted some buyers, and then we got the flush out over here. So that's Amazon. Current positions that we have on are GoDaddy over here. Pull back a little bit. Holding on today. Netflix, which is also kind of holding on today, a little bit down. UPST, that's also showing a little bit of a bearish candle here. So probably would have scratched out or take the small loss on this stock here. I do like the nice little relative strength it found recently, kind of moving up higher, but don't quite have the market confidence on that. We are in Team. Team is now pulling back over here, and we're just hanging on. We've taken gains on half the position, so we're just writing a normal-sized position here. Reddit, we are in Reddit as well. That has pulled back to the 8 EMA. Some big volatility on this candle, so there may be some nice little stopping volume over here on Reddit. So last one, by the way, too, is TWLO. Let me get this guy up. So that's coming in. So we're seeing some strong stocks. They've had a nice little run, and there's some profit taking afoot. Now, I've scaled out a lot of these, so my market bias right now is that we're expecting a pullback, and I want to see which stock's going to hold up in this pullback. I don't think it's going to be a super deep pullback, but we've had a nice round of gains. And I'm not going to be putting on any sort of trades right now. I think we have a chance of testing either 600, which I feel like would be very, very bullish. We could also just float around and do nothing for the rest of the year. Or we could probably test up to 596-ish, which would be around this anchored VWAP from that prior all-time high. So those typically act as, I've seen that act as support. If you drop one over here, that acted as some support, which matched up pretty well with the gap. So you can see how these technical levels align at the same place. That kind of gave us an extra level of confirmation there. So, that's kind of what we're looking on some minor term levels. I think we get a pullback somewhere over to here. Or deeper pullback to the 50 SMA is possible. I don't see that as super likely in the year-end rally. I don't think there's any sort of material news or, kind of 50-50 proposition weighing down or potentially weighing down on the market. CPI is coming out tomorrow. I don't think much should be going on, but we just watch to see if that number is a little hot. FOMC coming out next Wednesday. I also don't think that's going to be too much of a big deal. I believe a rate cut is priced in. We're going to check right now, actually, on this market analysis. Last time I checked, it was 85%. So, yeah, about 86%. So it seems pretty likely. you just practice in, okay, well, if there's about a 15%, 14% chance of a rate pause, what would that mean for the market? It was that bearish for the economy. What does that mean for future hike cycles? So right now we've been gradually easing the rate for I believe since the November meeting, or sorry, since the September meeting. So the market's still kind of pricing in that expectation. I think CPI may impact that tomorrow, but as long as it stays in line, I think that the Fed will have the confidence to continue easing or slowly taking their foot off the gas. So that's that. I don't really have any picks for today for two reasons. One, we had this nice move here. We started topping out over here. There was a little bullish trend day on the breakout, and we started to move sideways, and now bears are getting some control in the short term. So that's the first kind of leg. You see here's the AVWAP from the prior day's high here. We're trading below that, and the key flip to me was the fact that we actually broke through this AVWAP from the gap. We tested it a couple of times, and we're chopping around, and then we got the breakthrough over here. So that's what usually happens. So we're moving down lower, came back up, tested VWAP over here, and then that is acting as a support. So we have a nice little handoff over here, and we're just kind of riding these VWAPs lower. So bears have some weak control in the shorter term, and again, we're going to have to see what happens if they come up and test 600 or not. So where is that 600 level? Yeah, so I would say that is our kind of one line of support over here, and then I call that 596 level. I think that's going to be another line of potential support. So right now, right, either you take the gains on your stocks now, which you should have taken it last week, or you're willing to hold through a pullback. So all the stocks that I did not take gains on last week, I'm prepared to hold through a pullback. Now, if I'm wrong and it's a deep pullback, I have plenty of time on these positions. I'm willing to wait a month, 5 weeks, 6 weeks for that dip and then that bounce. I've also scaled out on a ton of them, so I'm not carrying huge positions on a lot of them. These are really, really good stocks. If I look at the D1 charts for all of these stocks, right, very powerful D1, strong charts. They're not just going to roll over. UPSD is it's a little choppy. I'll admit that. But Twillo's nice, right? Team is really nice. Reddit is really nice. GoDaddy is nice. So, they're not, I don't think they're going to totally just roll over like that. I think we have some time on these stocks for it to come in. So we got some good gains on these, and I think we might get another little push higher if we get a dip, and a fairly brief dip in that. So that's pretty much it. In terms of the shorter term potential over here, I'm going to kind of bring up my outlook and just talk about how I usually construct it. So on this outlook over here, so I do this pretty much every morning, and I have not done it this morning, so I'm a partial liar, but I do this every morning, and that's the first thing I do because I get my market bearings. I don't make any adjustments to my trades. I don't make any rash decisions over here. It's always getting my bearings, knowing exactly where I want and what I expect the market to do, and then going to my positions and making some adjustments. So that way, doing that keeps me honest, and it makes me not overreact to certain moves that the stock is making. So for example, right, look at something like snow, where, okay, actually, this is not a position. I took it over here, somewhere over here, broke through here. This is a shorter term swing, so I'm willing to exit out of the trade. I knew that was my plan going in. So pretty much just looking for, okay, well, snow's not doing a whole lot today. If I can get out at a nice little profit-taking bounce, that's what I'll do. But just willing to give this some time. Pretty much at the end of the day, see if we can come back to that A VWAP E, test that, and then maybe reject off that. But I have my game plan. I know I'm going to take the L on this pretty much as soon as I saw this candle. It's just how much of a better L I can take. Now, if this was a longer-term swing, I would be fine just kind of riding this guy up. But since it's a shorter-term swing, got to take the loss on it. So knowing that, where it's like I know that the market's coming back in, I know that this wasn't part of my game plan, so if the market pulls back in a little bit more and snowpack pulls back in a little bit more, I may have to take a nice loss on this guy. So longer term fundamental technical stuff, I don't change it too much because these longer term channels it really matters more on a cycle by cycle basis. So you're making adjustments after you see some sort of big meaningful cycle that changes the market, right? So this is a longer term bias. We're a little more cautious because of seasonality. We had a nice float higher. This would change our longer term bias. This could change our longer term bias, right? So here's a period where the longer term bias is more uncertain. We're maybe bullish, mildly bullish to neutral, and we don't exactly know where the market's going to go. Here we have the confidence. All right, so then the scenario planning is what I'm seeing. Okay, well, what's going to change fundamentally? Again, fundamentally, there's not been any new sort of information, so that hasn't really changed. And you look at that more on a monthly basis, right? You have the new kind of before the beginning of the month comes out, you have the last prior, you have the FOMCs, you have the economic releases. You can kind of judge how these guys, what that information is bringing in, what that's going to do. Black swans, like I have it listed here just as a reminder that like this can happen. It's not like it can never happen. It's very rare. I mean, even once a year, we're talking about like less than 0.1%, right? So this is less than 1% risk is something that I don't worry about actively, but I know that that's possible. It's a kind of a written reminder of that. So long-term technically over here, this is my maintain the bullish outlook, and make the new all-time high in the next bounce. So this is going to be updated now because we've completed this cycle, and we got to see where this is going in here. So Pete's long-term market outlook, he's a little bit more cautiously bullish. He's not bearish. He's just a little bit more neutral to bullish. Now, it's interesting because I'm kind of waiting to see what this dip will bring in here, and I have a little bit of exposure in that. I don't have a ton of exposure, but I have a little bit of exposure. So if basically the risk reward is that if this dip comes in harder, I end up taking some losses. But if the dip comes in a little bit brief and shallow, I didn't bail out of my positions, and I can add to those winning positions, and I can ride them up for the year end. So that's kind of the maintenance here over here, and that is really where we zoom into the shorter term technical. And what do you think is going to happen? So for me, right, I am expecting the market is overextended and poised to pull back, and I believe I wrote that probably on the 4th or the 5th, somewhere over here. After that gap up and go bullish trend day, that is when I wrote that analogy. I took a lot of gains on that day and the next day and the day after. So a lot of gains the last week. And just kind of waiting for this next cycle down, right? And I know that I'm going to have to take some heat for the next, it's just starting. So probably the next, we're probably going to have usually like one sort of hard kind of day where you take some heat. That's usually what happens. If I look at team, for example. So we might get in the hard here. So this was the day where it's like, I had to take some heat on this position on team for couple of days here before we got that rally. I'm going to have to take some heat again on this position. And, you just have to be kind of willing to accept that little bit of heat over here on that stock. And that's what's happening on that pullback. So it's sort of a mental thing. If you want to be in all cash, should have done it 2 days ago, right? If you waited for all cash, you're too late. You have a little bit of a window today to still get out of the trades for minor profits if you're really nervous. But I'm slightly nervous, but I'm not like that overly concerned. This is really a test of, here's my plan. My plan is to stick through this. Now I have to be willing to take the heat on that plan. So I do this, and I basically always conduct my long-term fundamental technical and the short-term technical analysis for each day. I update the probabilities. So right now, I was feeling this way for a while, and these probabilities haven't changed. I do feel that there's maybe a stronger chance we test 600 and hold than we test 595, which I guess I should update to 596. There is this chance that the market flows higher and compresses for 2 weeks. I wrote that in here, that we don't get much of a dip and we kind of meander higher. So we get something more like this, or rather something like this. Now, if the deep is sharp and swift, right, I think we're going to get a swift bounce up. So it's just a matter of the time you're willing for this to take on this, right? Even if you got in July 16th, right, that's still a month you have to withstand. Now, this is a pretty deep drop, but if you think about where the stock is, where this deep drop is in a month, if my outlook is 6 weeks, I know I'll have some time to get out at the high of the day. So that's what you have to be willing to look out for if you're willing to take in this dip. Okay. Now then I move into my shorter term market bias, and I always kind of reset this. I look at pretty much what did the market do yesterday, right? What's the very, very recent term price action? So I'll usually take a look at this on the M15 chart first, and you can notice that we have this rounding out pattern. Market's kind of topping off, and now bears are in control after this rally. I talked about on the M5 chart the flip from that AVWAP. Excuse me. This flip here from the AVWAP. We broke through here. Now, this is the first chunk. Then sellers had some control. We're in this wide bullish channel. May end with a selling climax down to 600. Wouldn't be surprised if that happened. And a lot of stocks will take some heat there. And I'm expecting a dull move. So, yeah, I mean, that is pretty much how I set up the market analysis. So I know what to expect for my day trades, for my swing trades. And for my day trades especially, I usually try to outline what I think is going to happen. So we have this current bias here. We know we're sort of in this choppy bullish channel. We can see with these tall bounces, but new lows of the day. So we want to short on the bounces, and we want to ride them down until the breakdowns, and then we take some gains on the breakdown. So I would probably be taking some gains over here unless I'm expecting a selling climax, and I'd ride those remaining gains. So there was a chance probably earlier in the day, I think, when we got this bearish hammer and this move back down over here, right? And we start to eat away at this candle. You can see we're starting to stall out at this level. So I'd lean on this high over here, this pivot high, as well as this high over here. You can lean on these as this as a support level. And then we get that move lower in the day, and you have a nice chance to ride some relatively weak stocks, probably in the first 90 minutes of the day, first 60 to 90 minutes. This is a nice move for shorts because flat open, right? It's a pretty small range, but we want to short it kind of at the top of that range. So that's what you have to plan on. But for me right now, I'm not taking a whole ton of day trades. I'm just focused on really doing nothing. And on my swing trading side, I don't think I've taken any new swing trades for, let me see here. Yeah, since the 25th, so the 1125 was the last time I recommended a swing long. And then after that, it's just been day trades. So if we look at this D1 chart, here is the 25th swing longs, and then it's just been day trade. I've been riding the remaining swing longs and just day trading this move over here. So our trade diet is very in sync with the market, and you want to know kind of when to throttle and when to not throttle. One analysis I was looking at this year was just right, if you just kind of bought the dips, right, you didn't do anything else. You buy the dip here, right, we get a nice little double bottom, buy the dip, sell on this bearish engulf, buy the next dip, ride it up higher. You can probably take profits on the gap up on this bearish engulf, compression breakout, bearish engulf, exit at the double top. So you have these nice little windows of trading where you can get long this year. So if you were just pretty much aggressive here and did nothing here, you would do great this year. And it's not going to do great every year, right? But these dips are excellent buying opportunities in the market, and a lot of it's just patience. So it's this pretty big mix of being okay with doing nothing for a while and then really throttling your activity and looking for stocks. So I know that once we start testing some support and I start to see some compression over here, some consolidation, if we go back to the M15 chart, right? I think, what was it, on the 19th, I said start to get long because we had this double bottom and a nice tall bounce that made a new high. This told me that, all right, we're looking pretty good here. We're getting into the gap, and we found some support over here. We got another drop, and I ended up taking a SPY long over here. Took about $20 of profit or 200 points. on ES. So you can see these higher lows, and we're starting to get tall bounces, right? This tall bounce is a clue. Higher low, another tall bounce, that's another clue. So buyers are soaking up this supply, and then we get the lift off. So that's what I'm waiting to see, but it's going to take, I think, an overreaction kind of day. I don't think we've quite had that yet. I think we've had a day sort of like this where we've seen some selling, but it's still a little bit of fighting, and then we need that big kind of bearish trend day chink lower. So that's what I think we're seeing kind of a gradual grind lower, and I'd like to see this end with a selling climax to 600 and then finding some support there. So mentally, what does that mean? We know that we're going to prepare for probably this week. I'm going to be taking a heat on a lot of my swings. I don't want to look at my P&L because that's just going to be going down and down and down. I'll be thinking, oh man, I should have exited at 285. Why didn't I exit 285? Because I know that I'm in a longer term basis. I'm still holding on. It still looks good on a longer term basis, and on a deeper drop, I can get out for a nice profit. I can still get out for a good profit on a deeper retracement, and that's part of the learning journey. If there is a little bit of not maybe a little bit of fear, just a little bit of uncertainty because I haven't actually traded quite like this before. But my game plan is solid. My expectation is solid. I have a clear acceptance of the risks that is going to happen with what I've accepted with the trade, and we just have to let it play out and stick to my thesis. So, it's about kind of varying your activity level. There's going to be days where you do nothing, and there's going to be days where you can be very active, and that's what it is. So that's the final thing, and then I have this position management that I usually edit, usually a few times a week, depends on what's going on here. Right now, there's not a lot of editing because I know what the market's doing, right? I was kind of mildly bearish in here. I'm waiting for this to roll over, and now I'm just going to be doing nothing because it's just doing exactly what I expected. So once we start to reach the next sort of consolidation zone, once we start to stall out for a couple of days here, we get an overreaction, we start compressing, then I'm going to start updating my probabilities, my game plans. I'm going to start evaluating the information that was given to me in those stocks. So that is the market game plan. That's usually what I do. So to summarize, right, we get the longer term technical and fundamentals don't change much, but usually on a monthly basis, I will update this information. The shorter term technical is what I change usually about once a week. I will usually update these probabilities, and I believe it's very important to quantify exactly how you feel. So if I'm not very confident that 600 is going to hold, maybe I say 40%, right? And this exact percentage doesn't matter. It's sort of a back of the envelope estimate of your confidence level in that position. Maybe I feel that, hey, there's actually a pretty good chance we might test 596. Maybe I feel there's actually a higher chance we're going to test 596 than not. And I see this market floats and compress higher. Okay, this is not happening. So I know that what we're seeing here is the price action that we're actually getting in the market. So I know that this scenario is holding out. Now that this scenario is playing out, I can actually update this and say, well, look, the market's pulling back. And we know that that's what's happening. So what are we going to say? Maybe we say that maybe we see a test of the 50 SMA, and maybe we see I'm going to say, look, maybe we see a break through the 50 SMA, right? And I don't view that as very likely. I view that as, to me, that's less than a 5% chance of that happening. And I might say something like maybe a 15% chance, or maybe even a 10% chance, right, that we get that level of retracement over here. So maybe, as I'm thinking about this, right, maybe these are the new probabilities where we could test 600, but I'm a little bit thinking we might test even 596 and, get that test here. But I don't think we're going to really break 596. If we do, right, and then we get that breakout 596, then I might say, well, we broke 596. Now I think this is more likely, or maybe I think it's a 60% chance, right? So quantifying that information is, pretty important. So right now, right, I don't think we're gonna drop far until we start dropping farther, right? I don't think we're gonna test the 50 SMA until we actually, unless we flip and start to break through here and really see some accelerated selling pressure. Right, I'm assume that it's a higher likelihood that we hold one of these two levels, and this tells you that, all right, I mean, I'm seeing an 85% chance we're going to hold one of these two levels. That's how confident I am. Now, if this was a lot lower, let's say this was 30, and let's say this was 10, yeah, then I would exit out of way more of my swings because I'm not as confident. But I feel there's more confidence that we hold these two levels. So quantifying that and verbalizing that is important because it helps you stick with your convictions and remind yourself that this is what I think is the most likely outcome, and you're really trading the probabilities because you've defined them. All right. Yeah, and then I have all these written out over here. That's been trimmed up quite a bit. So yeah, I mean that's it for this video today. So again, not really any picks for today, just more of quantifying your market analysis, throttling your activity, doing your game plan. So I guess a little bit more of a educational video for anyone out there still in the beginning stages. What I would do is think about if you were just long here and then you didn't trade the short side. If you were just patient and extremely active, right? It's not like you're doing the same activity every day. It's you're very active on certain days and then you're very passive. And then you're very active on certain days, right? Then you're very passive and you ride the gains. So there's these windows that set up, and you can really start to define what these windows will look like. Oh, let's see if I can draw them here. But yeah, you can really just start. We can kind of really decide to see, what the windows start to look like. And I would, you can even just draw them on here, right? Where it's like, okay, well, that's a window, right? Oh, that's kind of fuzzy, but you get the point. So, anyways, that's it for today's video. Thanks for watching, everyone. Hope it was useful, and we will take a look at what the market's doing tomorrow.